What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 4th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we've got a wide range of topics to discuss. I'm going to start off by taking a look at crypto markets and talking about how Bitcoin's price is showing us that in the long term, we are playing out exactly as intended, taking a look at historic moving averages, and along with that as well, we'll be diving into a few different topics in the crypto news space. But in the sense of traditional markets, I want to spend some time to talk about gold and how I expect a short-term correction over the next few weeks, and how this is going to provide an opportunity again for those who are looking to potentially hedge against equities and other types of assets. So we've got lots of things to discuss, guys. Let's not push it off any longer right after our quick sponsor. Our sponsor for this episode is Dashlane. Dashlane is a password manager that saves and autofills all your passwords and login information on every website you use, so you never have to click forgot password again. It also saves and autofills personal information like addresses, phone numbers, credit cards, and passport details, so you can save tons of time when you're filling out online forms with a single click. And with its Premium and Premium Plus package, you can get extra functionality, including access to a VPN for safe and private browsing and identity theft insurance, all through Dashlane. Try Dashlane for free on your first device by heading to dashlane.com/datadash. Link is down below in the description. Alrighty, everyone, so let's go ahead and take a real quick look over cryptocurrency markets. As we can see, Bitcoin is up around 2% over the last 24 hours, and the general crypto market as well is kind of in a no-trend scenario between 1 to 2%. The good thing is that altcoins aren't losing out that bad comparative to Bitcoin as on average now as they were over the last few days, and we'll highlight that in just a few moments, just how much of a divergence there is in Bitcoin dominance. So if we take a look here, markets have rebounded a solid amount since, again, we set these lows down here, up more than $20 billion, with Bitcoin going from the low 9,000 range up towards the mid to higher end 10,000. If you take a look here at Bitcoin dominance, surging above 70%, going to 70.5% and setting new relative highs for this year. So very significant point to take into mind, guys. Again, we are pushing very high on Bitcoin dominance. And again, I think this is feeding into the theory that a lot of people have that this might be, a very long-term shift, that we're not going to see an altcoin rally for some time, or that we may never see one. I'd like to know what you guys think down below in the comments. I know it's a very it's a very controversial topic. I know some people get very controversial because there's tribalism of what projects or investments you like more than anything else, and people will defend those opinions to the grave. But I would like to hear some honest, opinions back and forth. People cutting out their biases and just kind of hearing from one another, and maybe even taking both, views into account. Or maybe if you're like me, I'm a trader. I'm waiting for the trend shift, right? So, taking a look here, guys. Wow. If I didn't already hint enough to it, talking about the divergence in altcoins across the board. Most players here down, near anywhere from 6 to 10%. Bitcoin over the last 7 days up 3.65%. Really, a lot of that coming in over the last 3 to 4 days. Right? So very, very exciting stuff. Now, I want to go ahead and preface a few things, guys, and give you like a quick TA rundown because we don't have too much news today. I really want to focus on price and share and make very clear my mindset on Bitcoin, because sometimes I'll focus in on certain things, and again, I don't really kind of give up my whole philosophy. So I'm going to do it by step-by-step process, okay? I know there are a lot of people out there who still might hold more of a bearish thing, and sometimes they claim, at a few people, I really don't get bothered by it. I just love to kind of clarify these things for you guys because I want to have as many people here on the channel, hearing my point of view and understanding it to a clear degree. A lot of people think I'm a perma bull on cryptocurrencies, and there are a lot of periods of time where I've been bearish, and there have been periods of time as well where I've said that, the market's getting overtly exuberant. I think many people who are here towards the peak of 2017 and, January 2018, they know that I was, calling this as a market peak, right? We were about 2 or 3 days off. I have my periods where I'm bullish and bearish. And as much as I'm fundamentally excited about this tech, there's certain things to go into my mindset, okay? And I'll try to explain my rationale. So the first thing I look for is what phase of the cycle are we in? There's a few key cycle phases that are in the cryptocurrency market that you have to consider, right? There is a full swing bull market, what would have been $1,000 to $20,000 back in 2017. There is the bear market, which would be basically, well, if you're talking about Bitcoin, that started in January of 2018 as altcoins started to rally, all the way down to April of 2000. Actually, I'd say March, because in April it was very early. That's when we started to take off. But that would be the bear market, March to April of 2019. And then along with that, you have the accumulation phase, or what I would call kind of I usually use the general term. There's a few different terms you could use for it. The accumulation phase is basically when buyers start coming in, price starts recovering and revisiting back to the all-time highs, because Bitcoin moves in very parabolic and very cyclical cycles, right? So again, very important thing to note is, what of those three phases are we in? Well, we are in that accumulation phase, if that's the label you want to use here, because quite frankly, we've recovered a lot of losses from the bear market in a very short period of time, here from April 1st all the way up to September 1st, right? We have done a very good job recovering in this market, not to mention with the scale that we've been in this market. So to me, I not only understand I'm in the accumulation phase, which means we're preparing for the next cycle of parabolic highs, most likely, if history repeats itself. But along with that, what's the trend like? How fast are we recovering? Well, it's been extremely fast. And not to mention for a market, I think the most telling thing about this is that this has been a much larger market. People don't understand just how much more liquidity is required to really move prices like this versus the previous cycle when Bitcoin was down in the hundreds, right? It wasn't even at $1,000. So there's huge props to how fast this market has moved. So I'm not going to try to fight against the trend. The trend has obviously proven itself, and it's saying that it's ready to get back up to 20K and probably rally to new highs and start a new cycle. So those are kind of the two key things going in the back of my head here when I'm trading, when I'm actually, well, I wouldn't even say trading, to be more specific, when I'm investing in cryptocurrencies. And if you want to call it trading, I would say trading for the next cycle. Now, in the shorter term time frame, okay, we'll get to really what I want to talk about here, which is the weekly time frame. But on the daily time frame, things look pretty good, right? We're above the 21-day, the 50-day, the 100-day, and well above the 200-day moving average, right? Doesn't seem like the market even wants to correct down to that range. So it's very exciting to see this, right? And the other thing to take into account as well, we're not only well above the moving averages, we also have the daily cross on the MACD. We had it here on September 1st. And if you look at every single time, here on July 31st, week-long rally. Cross on the MACD over here, more than a week-long rally. And right over here, cross on the MACD, week-long rally. So the MACD, again, as simple as these indicators are, they're proving to be very effective in this market. People are finding any sign to really justify entering into the market with the kind of momentum that it's had. You can call it FOMO, you can call it whatever, you could call it institutions getting in. I don't really care where the liquidity is coming from. All I care is that we get decent volume and that price follows through. If there's an opportunity to add in this case on dips, and that the market is likely going to buy once we get a MACD cross and once we get above the moving averages, then I'm going to take those opportunities. And I averaged a lot in this corrective period, guys. Again, I didn't do much trading at all. I'm very happy to know that I'm not giving the exchanges much of my money, and more than anything, I'm probably going to turn out better by just simply holding. But let's get to the real point here. I digress. I've rambled. The thing I want to talk about is the weekly. And there's really two things I want to highlight. Now, if you guys remember, it was about a week and a half to 2 weeks ago, I did a video. I hope I'm getting that time frame accurate. Sometimes I get lost with all the things I'm talking about. But one of the things I emphasized is a very historic indicator. And it's a moving average that we use on the daily time frame, which is the 21-day. But we also use it in other time frames because these moving averages show significance, and even more significance as we go into the deeper time frames. And the weekly is something that a lot of people don't look at. Well, take a look here. This blue line here, if you guys don't know about my color scheme, the blue line here is the 21 week. All right, this is the 50 week, the 50 week. Here's the green line. The 100 week is the orange line, and the red line is the 200 week. But the 21 week is doing exactly what we hoped it would do, which is basically getting close to or making contact with price. Price has pushed sideways. It has made solid support after a very quick and fast and strong rally. We've needed this summer of sideways price action. I know it hasn't been exciting, guys. We're exiting the summer. It's been almost 3 months, and price hasn't moved that much. But this was very important because historically speaking, the 21 week is a key support level for cryptocurrencies in their rallies, right? We can take a look at this, and I'll go ahead and show it to you guys. We exit out of the accumulation phase, breaking past the 21 week and most of the moving averages. Contact with the 21 week multiple times. contact with the 21 week multiple times, contact with the 21 week here, 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 and here, all the way up into the peak of 20K. All right. So the fact that we're doing this shows a good sign that we're repeating history and that we're setting up for the next cycle. The hope here would be that we hold on this moving average. Honestly, if it dips, I would like those kind of buy opportunities, but at the same time, it is very good chart-wise. What was originally looking like a very shaky chart here, just back about a month or two ago, is now looking actually quite healthy and understandable, even on a logarithmic chart or on a linear chart. It looks good to me. To mention as well, even though we don't have it here in the Kraken price data, we got the double bottom on the 200 week, just like we got last time. So these are really good signs to see, guys. If you're focusing on the hourly time frame, you're not going to see this kind of stuff. It's not wrong to look at the shorter term time frames. It's fun. And it can be good if you're doing more short-term trades. But for me, I'm averaging in and I'm trading for the broader cycle. And the only kind of risk I'm really taking in the sense outside of just investing in Bitcoin for the cycle and hoping for the best, I'm also investing in some altcoins. And I will add into those positions as we get closer to 20K, because that's when historically we can usually take risk on altcoin markets. That's usually when altcoin markets start to really spike out, right? All right, so I hope you guys enjoyed that. I'd like to know if you agree or disagree with me. Leave a comment down below, guys. I just wanted to clarify, I'm not a permabull. I'm just looking at this in the way that I would when I invested in crypto markets back in 2017 and 2018, right? We are preparing for another macro cycle here in crypto, and I'm so excited for it. It's going to be really cool. And this time, we've got the global economy fueling the fire to really lead, I think, this next Bitcoin rally. Whereas last time, it was mostly speculation. No doubt there will be speculation, but that will come in due time. It will be much more fundamental, I think, this time around. All right, so Bakkt is going to start launching its warehouse deposits on September 6th, so investors will be able to finally start using Bakkt to some degree over the next few days. It's really not that far away. So Bakkt clients will be able to start depositing their funds in the Bakkt warehouse for physically delivered Bitcoin futures starting September 6th. On the actual futures trading, my apologies, will actually launch on September 23rd. I might probably misspoke there. This is basically when deposits will be available to the warehouse, but the actual use of the exchange will come in the later part of September. So really, we're less than 20 days away, guys. It's pretty exciting. I mean, this has been something that people really wanted to see, and we kind of talked. I think when we were it was becoming apparent by late 2018 that an ETF wasn't going to come anytime soon. Bakkt was the next question, and I'd actually kind of predicted that we'd get it in Q3 or Q4 of 2019. So I wasn't off on that. I was pretty good. But one of the few calls I actually got right in the earlier part of this year, or I guess at the end of 2018, to be fair. But this is going to be really important, guys. And I don't know if this is going to live up to as much hype as people want, but even if this brings a few $10 million, maybe pushes up to $100, $200 million of daily liquidity for crypto, that's a good start. That's a lot of liquidity trading, and it's physically settled, which is very important, right? Much better than traditional futures markets. Again, some more news here in the crypto space just to run through, just to have a good little laugh. Did Binance just blatantly copy BitMEX's futures documentation? Well, I don't want to talk too much crap about Binance, and quite frankly, I'm not really going to stand in defense of BitMEX here, but it was pretty funny. It was pretty good. And they basically tweeted out, "Congrats on the testnet futures launch, Binance. Glad to see you enjoyed reading our documentation as much as we enjoyed writing it." Pretty savage moment here. And they literally almost copied it word for word. CZ had eventually come out on Twitter saying that this was something that, in the due diligence process, someone probably at Binance, it's usually one individual who did this, one or two individuals who thought they could get away with it. I think this is the same thing what happens with a lot of white papers, and we've seen this happen with all kinds of things in the past where there's plagiarism of some sort. But again, overall, I just think it's something that's funny to take into account. I really don't like BitMEX or Binance over one or the other. I've got my huge criticisms of a lot of the centralized exchanges, but at the same time, this is just a little fun fluke to take into account. All right, before we dive into our topic about gold and really commodity markets in general and miners in the sense of the gold space, I want to let you all know again, I've been doing a lot of interviews as of recent, some here on the channel and some on other individuals' channels. I want to let you know that I recently did an interview with the Crypto Lark. If you guys haven't seen it, go check him out. Really nice guy. Lark is an awesome individual based out of New Zealand. And me and him had a great macro discussion on the broader world economy and how cryptocurrencies play a role. As you can see, I think a lot of people really liked it so far. And even myself, I thought it was a good interview. But outside of that as well, we've also got an interview I did with Craig Cobb here on the channel, or Trader Cobb as you might know him. Really good perspective in the sense of trading. Again, very similar philosophy to me, but also provided some very unique perspectives. We also have as well Brad Laurie, who is Blockchain Brad. If you guys haven't already, check out this interview that I did with him on his channel. Good hour-and-a-half conversation. And then outside of that as well, Alex Sanders or Nuggets News, another Australian friend. We had 3 Australian interviews, and one of our friends in New Zealand, close geographically. Interestingly, it's just coincidence, but I did a lot of interviews with those guys, and Alex is a great guy as well. I bet you guys probably watch him. But yeah, a lot of great interviews over these last few weeks. This one's on the channel if you guys would like to check it out. But I think if you guys can't get enough of the rambling here on the channel, and if you haven't listened to them, go check them out. I think if you guys like those macro discussions, you'll find those to be a gold mine of interesting discussion between all those individuals. It really shows. I gotta say one thing. I'm very blessed to know that there's so many awesome people in the cryptocurrency space. I think, there's so much negativity on crypto Twitter, and sometimes we always get distracted by a lot of, irrelevant things in the crypto space. There's so much noise, but I gotta say there's a lot of genuine people in the crypto space that I've gotten to meet, and it's so awesome to know that I can call them friends, that I can sit down and do interviews, and I wouldn't even say they're interviews; they're just discussions at the end of the day, and just share perspectives and just. I think it speaks to the goodness in a lot of people across the world. And it's amazing. We all come from pretty different backgrounds or countries, and, we all share this passion of crypto. I think that's a very awesome thing to see. Speaks to the good of humanity, I think. Anyways, back on to what you guys care about, which is the market. I want to talk a little bit about gold right now, and how I think that we've just recently hit a double top in markets, and how I think that we're going to go through a corrective period over the next few weeks. Now, I wrote about this in my newsletter. If you guys haven't considered, definitely take a look into it. I've got a link down below if you guys would like to subscribe. It's a way to support the channel. But we do a whole dive in all different types of markets, and I recently talked about how I do believe that gold is going to start correcting over the next few weeks and probably over the next 2 to 3 months. Now, unless things really start to escalate in the negative yielding bond market, that might probably give us a reason to probably have a shorter term correction and continue higher. But something that I generally think is going to happen, and I'll go ahead and show you on the weekly why I think this is going to have a correction, right? We've had a 34% rally. Oops. I'm using my polyline tool. I didn't want to use that yet. All right. So we basically have had a 34% correction, or 34% rally from bottom to top here, really about in a year, right? This bottom was set here on, I think it was either I can't get the exact date here. Let's see if we can get it here. Okay, so the date was the 13th of August. This peak here was on the 26th of August. So a little over a year here. 34% has been on equity markets, been one of the best performing assets outside of Bitcoin. But we can see here a really good rally across the board for gold here over the last year. And it looks like we're hitting a very key resistance point here, not only because we've gone through a very extensive rally, but also this is where support was a lot of times in the past, and it's going to act as resistance. Previous support becomes new resistance. Previous resistance becomes new support, right? That's the whole idea. So again, we're now starting to look at a point where we might see a correction in gold markets. And what I'm hoping for here is for us to come down to a key level here, for example, like $1,420, right? That's what I'm looking for. So I'm hoping that over the next few weeks, we could start to see some kind of correction coming down here, down to the support line, and eventually getting a rebound here. Now, I don't think it's going to extend out this far. You can see that the rally has been very significant. I'm just generally letting you guys know more about the price range. I think this is going to be sometime, again, over the next 2 to 3 months. So going into the winter here, we're going to find a bottom for gold around this range. And even if we don't drop all the way down here, don't get too greedy on it if you are looking to get some exposure to gold, guys. Again, I don't want to give you guys any financial advice. I can't give you any financial advice on this. I'm just saying I'm looking again for some kind of pullback either to a range here around 1480 or down here to 1420. But I'm not actually looking to buy gold directly as of yet. I don't think that's where the deal is. I think the deal is going to be in gold miners. That's at least what I'm looking at right now. And one of the plays I'm watching is Eldorado Gold Corp. I'm looking at a lot of small to mid caps here that are going to be solid plays here in a pullback. And this was one of our newsletter recommendations. I think back here, we'd recommended it back in July, or at least I talked about it being one of my top 3 picks. And we saw Eldorado go from 778 all the way up here to 9. I think it was 966 at the top. Yeah, somewhere around there, 969. So really solid play here. Again, beating out equity markets across the board through some of the plays we had here. We were also short on cannabis stocks like Kronos, as well as I think the actual play we had was short Canopy Growth Corp. And if you can make those short plays and stuff, I mean, it's been pretty obvious the cannabis market right now is overextended. It's exiting out of its bull market. It's getting really ugly. So those are some of the things that we had called for in the newsletter. But I'm looking for definitely an interesting pullback back down here towards a key support range. Maybe looking for some historic levels as well. Maybe again down here towards $7. But again, I'm not going to get too greedy on this, guys, because I'm looking for a much longer term play on a lot of these gold miners. If you take a look at the monthly, right, this is something we wrote about in our newsletter. I'll go ahead and extend it here so you guys can read it. We'll take it here to the logarithmic chart. So you can see there's been a significant rebound off the lows. But we've got a long way to go to make it back up to potentially some highs that we've seen in the last cycle. If gold goes back up to previous highs, I don't know if Eldorado would go up that high. But again, you could, even if at $30 or $40, I mean, this is a huge rally potential for a stock, right? So again, this is, again, what I look for. I look for big declines like this, companies that have, record buy-side volume, even though it's at a lower price range. Again, companies that were higher risk before but are now looking for the higher reward potential because we're pulling into a bull market for commodities. And I love small and mid caps. I'm guilty of it, guys. I love them. But at the same time, I don't mess with nano caps or penny stocks or anything like that. Small to mid caps are a very good risk to reward range for me personally. But you got to determine what you like for yourself, guys, and really what your kind of interests are. I mean, I think as a trader, this is what I look for, something around a $1.4 billion market cap, something that seems like it's got a lot of price potential in this case that had been oversold in an extended bear market for gold. But again, I'd like to know what you guys think. I've rambled on enough today. And if you guys have any companies or stocks that you guys are interested in, leave it down below in the comments. I know we talk a lot about crypto, but, put anything that you guys are interested in down below in the comments. Get a discussion going. I know we got a lot of you out there who just kind of listen to the Data Dash channel as a podcast and stuff, and I would really like to get some engagement from you guys. I'd love to hear, what's on your guys' mind, and I appreciate, as always, even if you don't leave a comment, guys, you guys know I'm feeling the love. I appreciate it. And if you guys want to support the channel in any way, again, we've got things like the newsletter. We've got, we're, a Brave content creator in this case. So if you guys would like to support us using the Brave browser, that'd be awesome as well. There's a ton of links down below where you guys can support the channel. But as always, more than anything, your guys' attention is always appreciated. And I'm glad you guys joined me in this rambling session today. So thank you very much, and I'll see you all in the next video. Stay tuned.